Welcome everyone. So today I'm just going to go through this week so far. Today, of course, is a bank holiday for the US, so the stock market isn't open. So it just gives us a good opportunity to have a little look back at the week. I could talk about what kind of trades and what kind of biases I've had throughout the week. Um, just to get this in there right now, I'm not trying to gloat at it or anything like that. I'm not trying to, look say look how good I am, but this is just proof, really. This is like the evidence that we've built up within the group in the first trading week back of the year. And yeah, I'm just going to go through each day. So, starting out on Monday, London Open, our typical trading session. I didn't actually plan to go into this session, um, actively trading. I didn't plan to actively trade that session, but I couldn't help myself because there was just such a easy trade. So let's jump in and I'll look at that really quick. So here was the post in the Discord. So like I said, I'm not here to gloat. I'm not trying to say, oh, look how much money I made or anything like that. But I am trying to show you the value that is within our group. And these are all concepts that I teach, and these are concepts that I talk about regularly in live streams and in the group. So what I was looking at here was a London Open trade. So we had London Open over here. Right there it is. Obviously, taking longs around Asia High isn't really the most sensible thing to do, but this trade was just too easy. The risk to reward was just too good. I just, like I said, I didn't plan to trade, but if the market literally just screams at you, here's an amazing scalp, take it. Sometimes you've just got to answer. And here it was. So this was a 3 minute gap. So we'd bounced out of this internal liquidity. So we're still holding bullish gaps at this point. We're still bullish. No reason for me to think that we're going to go any lower just yet. We then form an SMT, fancy stupid ICT term. It's essentially just a divergence with ES. So if I get up the ES chart here, you can see that ES takes the low, but NQ doesn't. Another thing that I've been stressing on, not stressing, but discussing more and more frequently this week is the concept of time. And when we get that reaction there off London Open, such a clear bounce off London Open, to me that was just a real good sign of strength. I then get my entry model, which is a close above a bearish gap there, and I immediately target this high. So once I get to that high, I move my stops to break even. I'm trading on XFA funded accounts with a copy trader on Top Step. So to be able to achieve a payout, you have to only achieve 5 non-consecutive days of $200 profit. So I tend to quickly just move my stops into that region there where I can lock that winning day in. And if I catch a runner, happy days. And you can see that this thing does actually begin to run. So it was a really, really nice trade. I caught the sentiment pretty well. You could see that this session was very bullish. There was the open there from a New York perspective. I use a UTC -5, even though I'm in the UK. I think it's the best time frame to look at, to be honest, or time zone to look at. It's just personal preference. But yeah, we were very bullish on the day, and we get this move up from London Open. We come back down. We're testing bullish gaps. I get a divergence with the S. I get an entry model. We bounce perfectly off London Open. For me, it was just such a gimme trade, so took it, and that turned out pretty well. So we'll move on into Tuesday, which was my first live stream of the year. So I live stream London Open Tuesday to Thursday, and then I hand off to Spitty. So I do 8 a.m. to 9 a.m. UK time, or 3 a.m. to 4 a.m. New York time, and Spitty does the following hour. So in the next day, I pointed out that I had a draw in liquidity. I had a bias for lower, and that is using a very simple concept of naked gaps. Okay, so that's, you may not know what that is, but it's essentially just a gap or a fair value gap that hasn't been tested yet. It's like an unbalanced inefficiency. So again, that's a whole another module that I've taught, and it's a brilliant way of finding biases. So here was our London Open around here. Where is it gone? There it is. So you can see there's your London Open. You're bouncing on London Open there, bouncing on it again. You just price seemingly wanted to go higher. And you can see in this screenshot here, during that live stream, I did actually point out that taking Asia high would be pretty awesome. And I do expect us to come down into the 4 hour. And there it is. That's the naked 4 hour gap. And you can see we get a really, really aggressive move off of the back of that. So really, really nice move down. And that was my draw on liquidity achieved. Part of this reason, you can see we've got a series of lows here, higher lows. So we're generating liquidity at these lows. So the higher this got, the more attractive those lows were going to be for me. And yeah, really, really nice. A nice case of stairs on the way up, elevator on the way down. So we go into tomorrow. Oh, sorry, the next day, which is yesterday. So we go into Wednesday. And we had a similar sort of case here where we have, let me just zoom out, where the hell am I? So yesterday we had a similar sort of case where we had a naked 4 hour gap, which was here. So my expectation was that that was where price was headed for. So that was a draw on liquidity for me. And you can see the price didn't actually make it. Now, I was looking for longs in that session, but due to a couple of other factors where I find probabilities of certain levels being hit at specific times, I had a overwhelming probability telling me that we were going to take the London low out, and we proceeded to go higher. So that is actually a 90% probability that I was working with at the time. I'm not going to reveal exactly what that is. The guys in the group know exactly what that is, but if I'm dealing with a level that has historically a 90% hit rate within a given time period, why would I take a counter trade to that bias in a 10% environment? You know what I mean? So like, while price was moving up yesterday, it was indicating to me that we were in a low probability environment. Okay, so here you could see there was London again, stairs up, elevator down. Where is the open? It was around here, there. Okay, so there's your London Open. See, holding price, London Open. Very, very common theme there. So stairs on the way up. Unfortunately, I couldn't get involved in the long. But to be honest, it actually probably ended up suiting me quite well. So if I just jump down onto the 1 minute and I'll get a replay on there. Okay. So I had a bias to this level, and this level historically in hundreds of instances has had a 90% hit rate within a given time period. And once that time period closes, that probability essentially drops off a cliff. So it did hit it eventually. You can see that. It did go for it eventually. But I've got to go on the probabilities of my statistics. So this level actually kept me out of the long. I did want a long. I made that point very clear. And because this was my draw on liquidity, and that's where I wanted to see price head up to, as I just discussed, which was the 4 hour naked gap. So what I was looking at yesterday was I really like this low here. This was Asia low. And what I do is I draw standard deviations from manipulation legs, or like where prices ran for liquidity and then reversed. Okay, so what I liked here was we had respect on the 1, respect on the 2, respect on the 3, and then we eventually got up to the 4. Okay, so what happened around here at these highs is it was a specific time of day. So that was 6 a.m. New York time, 11 a.m. for me in the UK. And at that time, I'm expecting volatility. And that's the beautiful thing about the Nasdaq. There's like this timed volatility. You can almost anticipate, well, you can anticipate volatility. You can expect certain things to happen at specific times, and you can expect not a lot to happen at other times. So that's one of the main reasons I really love trading this thing. So what happened at this point over here, I actually, instead of catching that long that I wanted in the London session, I just had to sit on my hands because my rules are my rules and I couldn't actually break that. So it probably ended up helping me because you can see we didn't reach up into here. But what we did do is we hit this 4th standard deviation here. Okay, we took out these highs. This is this Asia high, I believe. Where's Asia high? Hang on. No, I haven't got it on here. That was Asia high, right? Yeah, that was Asia high. Okay, so there's your Asia high. You swept Asia high, and then what you did here was you actually created SMT at these highs. So there was a divergence here with the S, so you can see that NQ takes the high, and then ES doesn't. So at this point, I would have been quite attracted to it, but this is why I love the time element so much, because what I did at the time was I thought, right, okay, well, I know the 6 a.m.'s coming up. I know there's going to be an additional bit of volatility. So what I'm going to do is I'm going to be patient. I'm going to wait for that, because I can either potentially catch a long up to my draw and liquidity, or I can catch a short. Okay. So at this point, I see after that SMT, you've got bullish gaps still holding. So you can see if we're truly bullish, bullish gaps will hold, and bullish gaps will remain to hold. So at this point, I wasn't really interested in shorting unless we would have lost that 5 minute. Okay, you see we bounce out of that 5 minute gap, and then we go to the 4th standard deviation. Then at that time, what I'm looking at is I'm looking at that 6 a.m., which was I'm on a 2 minute, so it's over. Yeah, so that's 6 a.m. At that point, I find this little fella right there. So this time, I see the 4th standard deviation hit. We're above Asia highs. Sure, I've got a draw on liquidity here, but I'm not married to my bias. Okay, I'm prepared to take in new data, and I'm prepared to get involved if the market tells me to do so. Okay, so this is why it was so important I waited for 6 a.m. because this is time volatility. Okay, and I'm teaching this in the group at the minute. So what happened here? I enter on this candle close here. So we get this bullish gap. We see how we get the 6 a.m. open. We come below it, we hold it, we backtest it, and then we get that inversion there. So for me, I'm expecting this low. We run to that low, I'm immediately at break even, okay? Because technically we're still bullish, okay? I've still got this draw and liquidity here. What I liked about this was look at the size of that candle. Look how this single candle wiped out so much of this time. So much of this price action was wiped out with one candle. You know, keep it simple. It's just a big fucking candle. It's momentum, it's speed. Okay, so that got me involved initially. So I put 1 mini on there, and then that was my break even. And then what I did was the original gap I was watching in that 5 minute, I just watched that. So once that got inverted, I saw the momentum, see these 2 candles that just ripped through a full hours of price action. There was my second entry. There was my second mini. So both those positions, both those trade entries, those shorts, they happened with like 0 drawdown. They literally just poured through. It's because I was open to the idea of reversing, and I wasn't stuck in my long bias, and I was able to read new information as it came along. Okay, so once I got that, I was in for 2 minis. I was almost immediately break even again, and you can see I just don't get any, but there's no drawdown for me. It's just immediate profit. Get past there, and I'm just trailing stops, trailing stops, trailing stops, trailing stops. Okay, and then I won't go into any more of the reason, but at this point, once we start moving with force, I've got a 97% probability that we're going to come for this low. Okay, I'm not going to go into that right now. Bit more detailed and complicated, but I know that we're coming for this low at that point. And you can see that this was the whole of the London session. Stairs on the way up, elevator down. Okay, I'm just trailing. I'm taking this across 4 accounts, and yeah, I made a nice chunk of change. Put it this way, that was the kind of trade that once you take in London, you don't have to play in New York anymore. And they're some of my favorite trades. So yeah, that was pretty epic. We did really well on that yesterday. And yeah, I'm not trying to gloat. I'm not trying to say, look how great we are. I'm not trying to shield the group or anything like that. I'm just showing some receipts. I'm just showing what we've been up to. Simple as. And then this morning, my final stream of the week. If we just pop over to today. So today's PA, you can see that we opened up in Asia. We were pushing down in Asia. What do we get here? That is our Asia low at the time. There it is. So let me go to a 1 minute chart. Here is our London open right there. Okay. Where's it gone? There. I also had this on for confluence. Sorry, I'm jumping around. I'm literally just drawing this on the chart right now. Yeah, so there's our standard deviation pull there. We've got this move up, then you've got that break in structure, move down. Price retraces into internal liquidity, and then it follows through into external. Okay, so we had this 2 to 2.5 here, just sat below Asia lows. Once London had opened, I noted that we come below Asia low. We land perfectly into that 2 to 2.5. So this for me would be a key zone and an area that we could be looking for longs out of. So what I did is I paper traded that. I had no plans to trade today, to be honest. It's a bank holiday and the New York Stock Exchange or whatever is closed. Stocks are closed. So no real intention to trade today, but this turned into a pretty great trade, to be fair. I had higher targets, took some profits along the way. If we look at this here, you can see that was the trade there. I took 100 minis. It was a long exactly there on that 1 minute. So you can see here, you've got a move down below Asia lows. You've got a nice 1 minute gap formed. You close above. I enter long. Stops at the low. And then I'm just monitoring price action at that point, just reading off what I'm seeing to the guys. A few of them jumped in on that trade as well. You can see that it starts to hold London open and it starts to go higher. And I took some profits along the way and it hit my final target. So at this point, nothing really for me to do. I'm looking to tomorrow. You've got NFP, but it's also Friday, and I'm a bit dubious of a Friday trading session, to put it that way. But anyway, I hope you've learned something. Like I said, I'm not trying to shield the group. I'm just showing you some receipts, some proof that we kind of know what we're doing over there. And if you want to come and join us and learn more about how to trade like me, trade like Spitty, then there'll be some links in the description. But yeah, have a great day and have a great weekend.